Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 15th at about 3 p.m. Eastern. Well, the NASDAQ and S&P 500 are set for their worst session in over 2 weeks today, after comments from Fed Chair Reserve Jerome Powell pointed to a slower pace of interest rate cuts. Powell on Thursday, which was yesterday, pointed to ongoing economic growth, a solid job market, and inflation above the Fed's 2% target rate as reasons the central bank can afford to be careful with the pace and scope of future rate cuts. And on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR. SPY is the symbol. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, if you can look down with me here, the SPY was trading at $584.36. That's about 3% below its all-time closing high, which was actually this little green candle you can see here. That was on November 11th at $598.76. That was the all-time closing high. That closing is an important part of pointing those out, because whatever traders, investors hold for the close, that means that they are willing to hold at least overnight. So that's important. Now, we see today that the SPY is sitting atop, actually a penny below the red line here, the 20-day moving average. And the 20-day is coming in at $584.36. So at the moment, we're 1 penny below the 20-day moving average. We have the 50-day moving average, the green line, coming in here at $575.57. Now, we know, and you can't see the October lows of 2023 on this chart, obviously, but we know that since the October lows in 2023, that the SPY has really been adept at walking up its 20-day, the red line, at walking up its 20-day moving average, even back to, as I said, when we made the October lows in 2023. And the SPY was trading at $409 when it reversed and started up in October. So it was trading at $409, and since then, actually since way back then, it has been pretty darn good at walking up the red line, the 20-day moving average. Now, it's fallen down a few times, as it would. Markets move in cycles. They don't move in straight lines. There's always some profit taking coming in for one reason or another. Markets can't go higher unless they go lower first and gather some buyers from time to time. And certainly traders take profits. So with that all said, since the October 2023 low, way back here, you can't see it on your chart, that was at 409. Since then, the SPY has climbed all the way up to where we are now. That's a 46% gain. So for those of you who have stayed in the market since then with reasonably good stocks, I'm pretty sure you've done pretty darn well. 46% in a little over a year is not bad, Now, if we look at this chart now, come back to this chart, we know that the July highs, for the most part, except for this low here in April, the SPY has been humming above its 20-day moving average. We can say kind of whistling, walking through the park here. And it's done that from a lot of the time since those October 2023 lows. But at any rate, what we can see here on our chart, starting with the April lows down here at April 2024, the SPY has done a darn good job of walking up its 20-day moving average, and it did that into these July highs right here at 565. Then price rolled over, and it rolled over pretty hard, and it finally gapped down to these down to the August 5th open, and it fell from 565 down here, gapped down to open at $511 and change. but then rallied very quickly in the next 3 weeks, rallied back up to almost back up to its prior highs, back up here to 565. So although it took the breath out of us, we have to say it came back up. Buyers came in. Then in early September, it rolled over again, came down below the 50-day, down below the 20-day, the 50-day, down here to 539 and change. Then rallied back up over the 50-day, over the 20-day, came back up. The 20-day crossed up and over, which is always bullish, over the 50-day, and then gapped up and continued to climb. And you see here, again, walking up that 20-day moving average. Then all of a sudden, right before the election, the market fell down to its 50-day moving average. The SPY did, down to about 570. Then the day after the election is right here, price gapped up and again moved up finally at the end of last week to its all-time closing high at $598.76 again on November the 11th. And you may remember last week, I was talking last Friday about, wow, the SPY is really trading high above, like it was like a 20% premium above its 20-day moving average. And I did mention back then, hey, traders do take profits here. Nothing goes straight up forever. So traders certainly did take profits, and we rolled back down here to the 20-day moving average. So now again, we're at $584.36, just a penny below at the moment that 20-day. So if we're looking at the chart here and we're saying, all right, now what? We can always draw a line connecting these lows. With the 50-day moving average has pretty much done it for us. Of course, the price likes to use that 50-day for support when it can. So we have nearby resistance here at 600. So that will be what it has to get through to make new all-time highs. We also have nearby support from the highs in October. We can call that in here at about 586. Of course, then the 20-day is here at 584.37. Then, of course, we have the 50-day down here at 575 and change again. So we want to watch that as potential support. We have the October low here at 568. We can move on down to the, which I hope we don't need, down here to the September lows at 539. And coincidentally here, the 200-day moving average is coming in at 539. And when you have price and indicator coming in at the same place, that sometimes suggests that could be a nice double support area should we need it. Hopefully it doesn't come down to there. We don't need it, but that is something that we certainly don't know at the moment. So this is still a very bullish market. What do you need for a bullish market? You need higher highs and higher lows. That's pretty simple. That's an uptrend. So of course we still have earnings season left. I would like the SPY to stay above the 50-day moving average at 575. We have this trend line coming in right again where the 50-day is. So in the coming week, we're still in earnings season. Keep your eye on your protective stops. And of course, continue to trade wisely. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including all those big cap momentum stocks like Nvidia, Meta, Apple, Tesla, Alphabet, that whole group. Today, when I captured this chart, the cubes, as we call them sometimes, was trading at $495.16. This is nearly 4% below the all-time high, the all-time closing high for the Qs, which came in on November 8th back here at 514.27. Now, the cubes fell today below the 20-day moving average. They're always more volatile than the SPY. just like the big momentum stocks are more volatile than a lot of the stocks that make up the S&P 500. So this is the index that's tons of fun to trade, that many times on the flip side of that can have quite some big temper tantrums. So at any rate, today, of course, not to be outdone, the cubes didn't sit on its 20-day. It fell below the 20-day. Again, now trading at 495.16. The 20-day moving average is coming in at $499.24. The 50-day moving average is rising up underneath right here at $489.30. Hopefully that acts as support if the cubes need it. Now, if we quickly look back at these August lows at August 5th, of course, the cubes walked up as the 20-day moving average, just like the SPY did, and for quite a long time, but the cubes, of course, made a much steeper angle up, and really steep up angles on price can only go for so long until, of course, the profit taking comes in, and price came down to open on August 5th at $424.71. Then it rebounded here for the next 3 weeks, moving back up above its 20-day, above the 50-day, which of course these two became inverted when price falls that high. Made an August high right up here at $486, then rolled down back below its 50-day and 20-day, down to down here to 448. Then rallied above the both moving averages again, so 448, back up here to a higher high from that one. That's always good. September high came in at 494, so that was good. Then back down to the 20-day moving average down here, and that price climbed up that 20-day moving average. Then, and back in here I was saying you can tell price is getting closer to the moving average here. You can tell it's getting a little tired because there's a lot been going on here. When price starts trading just above the supporting moving average, I always say it's like if we were walking up a steep staircase. By the time we get close to the top, our legs are getting tired and our feet aren't taking as high steps as they were. We're closer to the stairs. And right here, the Qs got closer to the stairs or to the 20-day moving average that it had been using for quite some time. So it came down to that, fell down again to, and again, this was right before the election. The cubes fell down below the 20-day, down to about 483. Then this was the day after Election Day. Price gapped up pretty dramatically, and it rallied up to its all-time closing high at $514.27. So what we have here now, if we look at this chart, we say we've got potential. We're trading down here, so we have potential resistance up here at 515, 516. And you know what, guys, when I talk about support and resistance constantly, which we all do, I think of these lines. You know how a net on a tennis court is very definitely, the middle of the court is very definitely a boundary. But that net, if you go put your hand on it and push it back and forth, it'll give a little bit to one side or the other. It'll give a little bit. And price is kind of like, price support and resistance is kind of like a net on a tennis court. You can't say, okay, if we have an all-time closing high at 514.27, I mean, it makes no sense to say, so that is the exact resistance line, because these support and resistance line are like a net on a tennis court. They have to give a little bit. Buyers and sellers aren't that exact when they're, the outcome of the trades is not ever that exact. So when I say 515, 516, that's about where the buyers are going to start selling. Some of them, if they say, oh, wow, the last time I bought here, price fell over and fell down. So now that it's back up to where it was, I'm going to sell it and at least get out even. So that's what a lot of traders particularly are thinking when price goes up. So we call it resistance because if selling is going to come in, it will probably come in right around here somewhere. But we can give it a point or two in either direction for sure. So all right, so we got 5, 14, 15, 16 right here as all-time highs with potential resistance. We've got the 20-day now. What was support becomes resistance when price falls below it. So now we've got the 20-day. Well, let's call it 499. Let's call it 500 to make it easy. Right now, that is potential resistance. We have the October. We have the 50-day moving average coming in at 489. Hopefully, that is pretty good support. It is many times. And then we have the October low coming in here at 483 and so forth. So in the coming week, again, earnings season continues. Please know that NVIDIA is going to be a big one. That company announces after the bell this coming Wednesday. So maybe, so stay tuned for that. And please, as always, mind your protective stops. Okay, our final chart today is a daily chart of the XLP is the symbol. It is the Consumer Staples Select Sector Spider ETF. A lot of you know that when things are all over the map and a lot of charts are erratic and volatile, some of us, many of us, wander over to the XLP, Consumer Staples. These are the things that consumers say, I have to have, I need, and it can be a more orderly place to hang out if you want to during times of market volatility and uncertainness. So I'm looking at today at this daily chart again of the Consumer Staples Select Sector Spider ETF, the XLP. It has 38 holdings. Top holdings include Procter & Gamble, Costco, Walmart, Coca-Cola, PepsiCo, Colgate, Palmolive, that whole group. And these are retailers, and of course we're heading into the holiday season. Now, when I captured this chart, the XLP was trading at $80.21. Now, from its April low down here, look back here, look left on the chart with me, from the April low here at $72.93, we see, and almost everybody made an April low. The XLP rallied up pretty high here, up to a May high at 78, so from about $73 up to 78, then came down, hit the 50-day, bounced off the 50-day up. Now this was a high 78 and change number. This is a little lower high here, 78 and change. Down almost to the 50-day again, and then 78 again, but pretty close to 78, down a little bit. So right in here, the XLP started trading in a bit of a range, although kind of a triangle from 76 to 78. Then found its footing here in July. It consolidated along that 50-day moving average. You can see it hugged it, and then broke out here. Broke out in July, then back to the 50-day in August, then consolidated, but you can see it's getting edgy here. It wants to do something, and look down. Look at the volume spikes here. When you see stocks or ETFs consolidating, trading sideways, nicely in this case on a 50-day moving average, and volume comes in and price doesn't go lower, that means there's buyers coming in. This candle is a little hold off and see, but then it started up and you've got nice high volume here, and the XLP broke out here and broke out to an all-time closing here, all-time closing high in September, on September 16th at $84.26. So that was a very nice move up here. Yes, it was steep. Yes, it was at a high premium to its 20-day moving average here. So you knew the traders are going to come at some point and make profit and take profits, which they did. But And again, September 16th, all-time closing high here at $84.26. Then rolled over to where we are now, made lower highs here so far, if you can call that a low, lower lows. But now it's going more sideways again. This is earnings season. And I'm looking at the volume here, and I'm saying, okay, that it's going sideways and volume's coming in. So, and there's a reason for that. We've got earnings season. A lot of retailers are announcing their earnings next week. So, again, we're here at 80.21. So in the coming week, if the XLP can stay above 79, now here's 79 right here, okay? A little lower if you go through the red line. But in the coming week, and the 20 days coming down overhead, I absolutely agree with you on that. So's the 50-day. But I'm wondering if it can hold here and go sideways because of what's going on. So, and I don't like a lot of the charts right now that are so disorderly. So in the coming week, if the XLP can stay above 79, I will buy a small position of the XLP in my trading portfolio, and I'm going to put my stop down here at 78.50. I'm going to keep it tight. If and when the XLP can rise above $83.25, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLP in the coming week. And also keep in mind that Target and Walmart announce earnings next week. Okay, and now check out this news from ToniTurner.com. If you haven't heard yet, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. We're going to talk today a little bit about how to profit using support and resistance. I know that support and resistance sounds like a real yawn, but this is the foundational information you need to know to become a trader, short-term, long-term, whatever, even an investor. Support and resistance are key. How to Profit Using Support and Resistance is an easy-to-understand, information-packed training program in which you'll discover how to identify profit-making price points in uptrends by using my ICE, my ICE technique, and how to maximize your trading results with my 6-point trade list. Very important. Everybody yawns, again, when we say support and resistance, but it is the most important knowledge you can learn. Our newly discounted price for this program is only $97. I'm sure you'll make that up on your next trades. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts. And you notice those are the charts I use for this, for the market now. 1 month of Metastock daily charts or Metastock real-time charts, 1 month for free. So from our ever-popular 7 steps to successful trading, to how to profit using support and resistance, how to swing trade successfully, trade the trend to profits, I love it, how to read charts, great for novices, 3 winning setups, and bottom fish like a pro, another one I love. Find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.